Welcome back to Let's Invest with the ASX. In this video, we will explore the following indices and their significance in the stock market. A share market index is a tool that measures the performance of a market over time by tracking the value changes of a set of shares. The larger the set of shares, the more representative the index is of the overall market. The ASX calculates various share price indices to track industry trends and overall market performance. The ASX All Ordinaries, or All Ords, used to be the main measure of the Australian share market's performance. However, since April 2000, the S&P ASX 200 has become the main market indicator. The All Ords consists of the 500 largest companies listed on the ASX and represents approximately 95% of the Australian market. It is rebalanced annually based on market capitalisation. Share market indices can be categorized into two types: share price indices and accumulation indices. Share price indices, such as the All Ordinaries or S&P ASX 200, track changes in share prices. Accumulation indices, like the All Ordinaries Accumulation Index, provide a more comprehensive measure by including dividends in addition to share price changes. This assumes that dividend value is reinvested across the entire index portfolio, which is especially relevant in Australia, where higher dividends are common. Standard & Poor's Index Services provide market capitalisation weighted indices, with adjustments for free float and liquidity to ensure they are investable. Free float refers to the shares of a company available for trading in the marketplace, excluding shares held by the parent company or the government. It aims to provide a more accurate reflection of the price movement of shares that can be easily bought and sold by investors. Market capitalization is a measure of a company's total value. It is calculated by multiplying the current stock price by the number of outstanding shares. Market capitalization categorizes companies by size and is used to assess relative value and determine index weightings. S&P ASX 20 represents the top 20 Australian companies listed on the share market by market capitalization. S&P ASX 50 represents the top 50 Australian companies listed on the share market by market capitalization. S&P ASX 100 includes the top 100 companies by market capitalization and serves as a benchmark for large, active investment managers. There are separate industrial and resources versions of the S&P ASX 100. S&P ASX 200 consists of the stocks in the S&P ASX 100 and the next 100 stocks selected based on market capitalization, adjusted for free float and liquidity. S&P ASX 300 contains the stocks in the S&P ASX 200 and the next 100 stocks selected based on market capitalization, adjusted for free float and liquidity. S&P ASX Small Ordinaries Index comprises the smallest representatives of the S&P ASX 300 index, serving as a benchmark for small-cap investments. It includes companies in the S&P ASX 300, but not in the S&P ASX 100. The Australian market also includes sector indices that represent different industry groupings. These sector indices reflect the nature of the companies listed on the ASX. Standard & Poor's has introduced global sector indices to the Australian market based on the Global Industry Classification (GICS) structure, providing a more detailed representation of specific industry sectors within the Australian market. The calculation of S&P ASX indices is provided by ASX and Standard & Poor's, with detailed information available on their websites. These indices are capitalization weighted and measure the change in the aggregate market value of stocks in the index. Price movements in larger stocks have a greater impact on the index compared to price movements in smaller companies. When comparing your portfolio to the index, beta is a measure of stock price volatility relative to a broad market index. Portfolios with high correlation to the broader market are said to have a high beta. The composition of your portfolio determines its correlation to the broader market. Significant market movements may be driven by a few large stocks with high index weightings, which can affect portfolios differently. Share market analysis using indices. Share market indices are used by investors to analyze past performance and make predictions about the future. Comparisons between indices and individual portfolios should be made with caution, as index compositions can change over time. The Dow Jones Index, for example, had only one original stock remaining after a century. Comparing indices across different countries requires scrutiny due to variations in composition and calculation methods. Index movements. Upward trend. Shares listed on the ASX generally exhibit an upward trend influenced by overall market conditions. The price of shares in a specific company reflects its year-to-year performance. Share prices are also influenced by general economic conditions and market sentiment. When observing a long-term upward trend, consider the inherent upward bias of indices due to the removal of underperforming companies over time. Buying shares at market peaks and selling during market declines can prevent participation in the overall uptrend. ASX indices are capitalization-weighted, meaning price movements of larger companies have a greater impact on the index compared to smaller companies. The overall market's upward trend does not guarantee that the shares in your portfolio will replicate the same trend, beta correlation. For some investors, individual company investments can be challenging, while others seek broad exposure without buying multiple securities. Managed funds provide a convenient solution with a wide range of options. Watch the next video to learn more about managed funds. Thank you for watching. We hope you found this video informative. If you enjoyed it, please consider giving it a thumbs up and subscribing to our channel for more educational videos. Don't forget to activate the notification bell to stay updated with our latest content. If you have any questions or suggestions, feel free to leave them in the comments section below. Remember to use flashcards to enhance your learning experience. We appreciate your support and look forward to seeing you in our next video. Happy investing!